If you are running any kind of crypto business activity in Australia, trading, mining, running a node, operating in DeFi, there are legitimate deductions available to you that reduce your taxable income. And a significant number of people in this space are either not claiming them at all or claiming them incorrectly. Today we are going to fix that. I am going to go through every major category of deductible expense available to Australian crypto business operators, what you can claim, what you cannot claim, and the conditions that apply to each. Before I go any further, one critical point. These deductions are available to crypto activities that the ATO classifies as carrying on a business. If your crypto activity is classified as investing rather than business, the deduction landscape is fundamentally different and significantly more limited. We covered the investor versus trader classification in detail in a dedicated video on this channel. The link is in the description. Make sure you understand which category you fall into before applying anything in this video. Right, let's get into the deductions. The first and most straightforward deduction category is exchange fees and transaction costs directly associated with your business activity. If you are carrying on a trading business, the fees you pay to exchanges to execute trades are deductible business expenses. Brokerage fees, trading fees, withdrawal fees, all directly associated with the business activity of trading. Deductible. For DeFi operators, gas fees paid to execute transactions on-chain as part of a business activity are also deductible. If you are yield farming, providing liquidity, or running a node as a business, the gas costs of those transactions are a legitimate operating expense. One important distinction to understand here. Exchange fees paid at the time of acquiring or disposing of an asset as an investor, rather than as a business, do not become deductions. Instead, they form part of your cost base, which we covered in detail in the cost base video. The same fee has a different tax treatment depending on your classification. As a business, it is an immediate deduction. As an investor, it reduces your eventual capital gain by adding to your cost base. This distinction is one of the many reasons getting your classification right before you start claiming is so important. Hardware and equipment used in your crypto business activity is deductible, and for some operators, this represents the largest single deduction category available. For miners, ASIC miners, GPU rigs, servers, and other purpose-built mining hardware are deductible business assets. For traders running automated systems, computers, monitors, and related hardware used in the trading business are deductible. For node operators, the server infrastructure and hardware used to run the node is deductible. Instant asset write-off. Under the instant asset write-off provisions, eligible businesses can immediately deduct the full cost of qualifying depreciating assets in the year they are first used or installed ready for use. The eligibility threshold and conditions change regularly. Always verify the current rules at ato.gov.au or with your tax agent before making a purchase decision on this basis. Depreciation for equipment above the threshold. For hardware that does not qualify for immediate write-off or where your business is not eligible for the provisions, the equipment is depreciated over its effective life. The ATO publishes effective life tables for various asset categories. Computer and electronic equipment used in business activities typically has an effective life of 2 to 4 years depending on the specific asset. Mixed use, apportionment required. If a computer or other piece of hardware is used for both business crypto activity and personal use, only the business use proportion is deductible. You need to estimate and document the business use percentage. A gaming computer that also mines crypto cannot be claimed at 100%. Document your estimate clearly. Electricity is one of the most significant ongoing costs for miners, node operators, and anyone running energy-intensive crypto business infrastructure, and it is fully deductible for business operators. The key requirement is being able to substantiate the business-specific electricity usage. There are two approaches to this. Dedicated circuit with power monitor, the cleanest approach. A separate circuit with a power monitor gives you a direct, accurate measurement of business-specific electricity consumption. This produces clean, defensible documentation for any ATO review. Documented calculation method. If your mining or node equipment shares circuits with other uses, you need a documented calculation that reasonably estimates the business proportion. Measure the equipment's power draw in kilowatts, track average daily running hours, multiply by your electricity rate, and document the method clearly. For example, your mining operation draws 3 kilowatts, runs 20 hours per day on average, and your electricity rate is 30 cents per kilowatt hour. Your daily deductible electricity cost is 3 multiplied by 20 multiplied by 30 cents, which equals $1.80 per day per rig. Across 10 rigs over a full year, that is $6,570 in deductible electricity costs. At a 30% effective tax rate, that is almost $2,000 in tax saved from electricity costs alone. Internet costs attributable to your crypto business activity are deductible. For a trading business that requires constant connectivity for monitoring positions and executing trades, a portion of your internet costs is a legitimate business deduction. For miners or node operators where continuous connectivity is critical to the operation, the business proportion is likely higher and more straightforwardly justifiable. As with hardware, if your internet connection is used for both business and personal purposes, which it almost certainly is, you need to estimate and document the business use proportion. A reasonable estimate, documented clearly, is what the ATO expects. 100% claims on household internet are unlikely to be accepted unless you maintain a separate dedicated business connection. Software used in your crypto business activity is deductible. This includes a range of tools that serious crypto business operators use regularly: trading platforms and charting tools, subscription fees for professional trading platforms, charting software or market data services used in your trading business are deductible. Crypto tax software. The cost of a crypto tax software subscription, like Coinly's paid plan, is a deductible business expense where that software is used to manage and calculate your business crypto activity. This is worth knowing because many operators pay for these tools and do not claim them. Portfolio tracking and analytics tools. Subscriptions to portfolio management, analytics, or risk management software used in your business operation are deductible. Node and infrastructure software. Licensing fees, software subscriptions, and operational software costs for running nodes or other infrastructure as a business are deductible. If you run your crypto business activity from a dedicated area of your home, trading from a home office, managing a mining operation from home, you may be entitled to claim a home office deduction. The ATO recognizes two methods for calculating home office deductions. The fixed rate method, currently 67 cents per hour for each hour you work from your home office on your crypto business. This rate covers electricity, internet, and phone. You need to keep a record of hours, either a diary, a log, or a representative 4-week record that can be extrapolated across the year. The actual cost method. You calculate the actual additional costs incurred from working at home, a proportion of rent or mortgage interest, electricity, internet, cleaning, and depreciation of home office furniture and equipment. This method requires more detailed record keeping, but may produce a larger deduction for operators spending significant hours on the business from home. A genuine home office deduction requires a dedicated area used primarily for the business. A kitchen table used occasionally is not a home office. A dedicated room or clearly defined workspace used consistently for the business is much more defensible. Professional fees incurred in running your crypto business are deductible. Tax agent and accountant fees. The cost of engaging a registered tax agent or accountant to prepare your business tax return, provide tax advice specific to your business activity, or manage your compliance obligations is a deductible expense. This is one of the most consistently overlooked deductions. The fee you pay for professional tax advice on your business is itself a business expense. Legal fees. Legal fees incurred in connection with your crypto business, such as advice on structuring, contracts, or compliance, are deductible where they relate to the income-earning activity. Financial advisor fees. Where financial advice relates specifically to the management of your business investment activities, rather than personal financial planning, a portion of those fees may be deductible. Before we wrap up, let me be equally clear about what cannot be deducted, because claiming incorrectly is as much of a problem as underclaiming. Personal use proportions of mixed-use assets. If a computer is used 60% for business and 40% for personal, only the 60% is deductible. Claiming the full cost is incorrect. Capital expenses claimed as immediate deductions if above threshold. If equipment does not qualify for instant asset write-off, it must be depreciated over its effective life. The full purchase price cannot be claimed as an immediate deduction in year 1 if the item exceeds the threshold, and the instant write-off rules do not apply. Losses from investor activities. If the ATO classifies your activity as investing rather than business, the deduction framework in this video does not apply. This is the classification point I raised at the start, and it genuinely matters. Penalties and fines. ATO penalties. Interest charges on late payments and fines are not deductible. The general interest charge on a tax liability is not a deductible business expense. Private or domestic expenses. Any expense that is primarily personal in nature, even if it occasionally intersects with your crypto activity, is not deductible. There are real, legitimate, significant deductions available to Australian crypto business operators, and most of them are being left unclaimed. Exchange fees, hardware, electricity, internet, software, home office costs, professional fees. Each of these categories has a direct, documented basis in Australian tax law. The money is there if you know how to claim it correctly. Get your classification right first. Keep complete records across every category, and engage a registered tax agent who understands crypto business activity to make sure you are capturing every legitimate deduction available to you. Use Coinly to track your complete transaction history and generate your business tax summary. The link is in the description, and the paid plan itself is a deductible expense. If this video helped you find deductions you were not claiming, hit the like button and subscribe. Drop a comment below with the deduction category you did not know about. Stay cashed up.